on TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Judd and this is Talk Your Book, and today we're very lucky to be joined by resources guru John Forwood from Lowell Resources Fund. John, thanks for coming back on the show.
Thanks for having me back on, Chris. Great to be here.
You appreciate being labelled a guru? There was a bit of a...
It's better than being a veteran, I think.
Mate, thanks for coming back on. You are an expert in resources. What stock did you want to talk about today?
It's a little company based in Western Australia called Lefroy Exploration, LEX.
And how long have you been involved or on the register of Lefroy for?
We've been on the register for over 4 or 5 years. We came in on the IPO.
And recently look like they've made what's potentially a transformational acquisition. How are you viewing that recent, well, it's sort of a purchase, but sort of a not in a way?
Yeah, exactly. It's a really interesting transaction,
yeah,
if you like. Basically, they've got the rights to this new project for 30 years, which is more than enough, you know, if it's there to be mined, to mine it and maximise it. So what they've done is buy a new resources, both gold and nickel, on the same project, and it's right next to their existing project just south of Kalgoorlie in Western Australia, where they've been working up some pretty interesting exploration targets for a number of years. But this is, you know, it is sort of transformational, gets them into a new commodity and leapfrogs them into near-term production, basically.
And the transaction was made from Franco-Nevada, which is just one of the world's great companies. For nil purchase price, obviously Franco being a royalties company, their motivations were more around potential royalties rather than maximising a sale price. Maybe talk us through how you're viewing that transaction and whether or not Franco-Nevada are a good company to buy off or a poor one.
Yeah. Look, I think Lefroy and the management there are still sort of scratching themselves that they can't believe that they actually did this deal, and it was sort of opportunistic. They obviously monitor what's going on in the exploration licence and tenements around them. But this is a really interesting piece of ground in terms of the actual mining title that it's based on. So it goes back to 1882, I think, and the Land Act in Western Australia, which was before Kalgoorlie and the Golden Mile and any minerals have been discovered out there. And the WA government, well, as it then was, the colony, was trying to promote people to get out and develop the interior. And so they put this land up for sale, including the mineral rights. So it's freehold land and also includes mineral rights. So Franco-Nevada actually run cattle just because it's a pastoral property, and I think they're obliged under the lease to actually do something with it. So that, you know, the biggest royalty company in the world is running a few cows out there. Anyway, Lefroy went, you know, noticed, they sort of said, oh, well, there's no drilling on this block here. Why is there no drilling? And they noticed, who owns this? Oh, well, it's not even covered under the normal, you know, cadastre mining title in Western Australia. Worked out it was Franco-Nevada. They went to Franco and said, oh, what's happening with this ground? And they said, well, actually, we're not doing anything with it. We're a royalty company. We're not going to explore it. And the former company who had it has just relinquished their rights, and that was Northern Star, one of the biggest gold mining companies in Australia. And what had happened, Northern Star or their predecessors had actually held the rights to this ground for, I think, 20 years, 2 lots of 10 years, for a 1% royalty. And Franco had said, that's too cheap. Next time we renew this, we're going to bump it up to 4%. Okay. And Northern Star went, oh, we've got other fish to fry. We haven't been able to do anything, get around to doing anything on this project. We'll just let it go back to you. And so, you know, serendipitously, Northern Star walked into the door. The guy who runs Franco's operations in Australia had a pile of, you know, deals on his desk this big, and this was like, you know, one of the smaller ones. And he said, well, we want a 4% royalty and you can have it. And the Lefroy guys were going, and how much cash do they want? How many shares are they going to take? They kept on waiting for them to ask for something more, and they didn't. So there's no upfront consideration. I think there's modest work requirement in terms of expenditure on the ground, and Lefroy are going to hit it pretty hard.
Which they'd want to do anyway, wouldn't they?
Absolutely. And then there's a 4% royalty. So to put that into context, so it doesn't fall under the Mining Act in Western Australia, as I mentioned. If it did, there'd be a 2.5% royalty to the state government. So 4%, a lot of projects would have a 2.5% to the government and, 1 or 2% to maybe a private guy who's sort of dealt it in the past. So 4% is pretty much what you'd see on most projects anyway. So they've they paid nothing up front for it. So yeah, look, a really interesting deal, and I think they might have, they're a bit like the cat that got the cream. I think the management there. And
there's obviously a lot of work to be done on the ground before it gets a final investment decision. But in terms of its potential, it does have the potential to be a low capex project with nearby processing. Are they some of the things that appealed to you in the transaction when you saw it?
Absolutely, and I think that's a theme that we've seen come through of late. We were talking earlier about cost escalation, and we've seen a lot of projects from junior companies that have sort of moved through development and get really hit by cost blowouts. And so the market is very wary of seeing, and not capital costs and operating costs, obviously. The market's very wary of little companies that have big ambitions in terms of raising hundreds of millions of dollars of capital. So that's why we like this, is that both on the gold project and the nickel project, there's potential for low capex. And when I'm talking about low capex, Lefroy have got a market cap of sort of 30 odd million bucks. And the capex, if you look at comparable projects, might be in the order of 20 million for the nickel, and it might be significantly less for the gold.
And in terms of their pre-existing nickel assets, which looks like they're going to do a planned IPO spin out of, they've mentioned maybe this calendar year, but that may slip through to next year. How are you viewing those assets standalone basis?
Look, yeah, this new acquisition will be the flagship for the nickel, which is going to be called Hampton Metals, I understand. 100% owned subsidiary at the moment. The other assets in Hampton Metals are pretty grassroots, early stage, exciting, but they need a lot of work to get them towards a resource. Whereas the Goodyear Nickel project, which is part of this acquisition we've been talking about, has an existing resource on it, which is about 15,000 tonnes of contained nickel, but at a fantastic grade of 3.8%. So it's classic Kambalda style, high grade nickel that, the other thing I probably should mention about the acquisition, I understand that Nickel West, which is BHP, and they own the processing, the refining infrastructure in Kambalda, which is only, literally, I don't know, like within 30 k's away. Very, very easy to truck ore or concentrate there. They were interested in this asset and for the nickel, and also a little company, Lowell Metals, which has a pretty similar project. So just to put the 15,000 tonnes of contained nickel into context, Lowell Metals have got a reserve on their Baker project, which is on the Kambalda Dome, not very far away, of around the same number of tonnes, 15,000 tonnes of nickel at I think around 2.8% grade. So while the Lefroy asset is a resource, and inferred resource at that side, it's probably almost the lowest category. Long way to go to get it into reserve, but you're starting to see they're not a million miles from something that has got a positive economic study on it.
You're watching Talk Your Book. We'll be back with more Talk Your Book after this short break.
On TV, online and on your smartphone, this is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Yeah, Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
This is Talk Your Book, and we're with John Forwood from the Lowell Resources Fund. John, just getting back into it, you mentioned their market cap of around that 33 million you said. Just maybe talk about their cash balance and how long a runway you can see that giving them.
Yeah, look, they've just gone out to the market and done a raising, and it was, I think they went out for about 3.5 million and they ended up getting a bit over 6.2, I think. So we took up our, we subscribed pro rata for our existing holdings to make sure we didn't get diluted. So yeah, look, that will notionally be allocated sort of 50-50. 50%, 3 odd million to the nickel project and 3 odd million to the gold project. And that should give them, you know, probably 18-month runway. It won't obviously get them into production, but it could get them pretty close to a final investment decision.
And what sort of, outside of the final investment decision, what sort of milestones can you see them potentially hitting in that 18-month period that could lead to a re-rate?
Yeah, look, I think both on the gold and the nickel, addressing the nickel first, there's some obvious targets to expand the resource. In fact, the highest grade historic drill hole was the deepest hole at about 400 odd metres, and that went, I think that went around 7% nickel. So just an aside, that's a fantastic indication, because you talk about tenor when you talk about nickel, and some nickel deposits will never get, you know, into the high grade zones, but this has obviously got the potential to be, you know, have really high grade. So we should get within that funding time frame a expanded resource. Who knows how big it'll be? You know, it'd be really nice if they could double the current 15,000 tonnes of contained. Definitely got some targets that could give you the potential for that. And then on the gold, well, that's actually more advanced. So the Mount Martin gold mine is an old pit that was last mined in 2008 by a company called Dioro. And then in 2012, there's a company called Alassa, which actually had a mining plan and was, you know, ready to go into production. I think, you know, other corporate things happened. They had a project over in Turkey and they didn't go into production, but it's actually reasonably ready to be revamped and go relatively quickly to a production decision. So they'll drill that as well to upgrade the resources. Historically, I think it produced about 200,000 ounces from underground, you know, by the old timers, and maybe 100,000 ounces from an open pit. But what Alassa were going to do is just cut back and go a bit deeper. And these gold mineralisation zones just seem to keep going, and they're open at depth. So look, the gold could be in production, and when I say in production, the interesting thing about Lefroy is that one of their substantial shareholders is Goldfields International, South African company, but their main operation in Australia is at St Ives, which is, yeah, it's on Lake Lefroy. It's probably 20 or 30 k's away. Mount Martin's grade, resource grade, it's about 500,000 ounces at 1.7, 1.8 grams a tonne. That's easily truckable, you know, that distance to St Ives. So there's a mining agreement in place between the two companies covering some existing deposits that Lefroy had. So Lefroy may be able to just say, okay, well, let's just change the names on this mining agreement, and you guys we can truck the ore to your mill. And as I understand it, I mean, Goldfields is a big company, but from what you can see from the outside, that mill does need baseload, open cut gold ore feed. And yeah, it's something that Mount Martin can potentially supply.
Well, as always, John, very compelling story and well thought out and explained. Thanks very much for coming back on Talk Your Book.
Absolute pleasure, Chris. Thanks for having me.
Thanks, mate.